Good morning. This is Professor Marsh, and this is the second lecture for Unit 3, Chapter 3 in Principles of Financial Accounting, ACC 210-0 at Newberry College, spring of 2022. We're going to do in the chapter the sections that begin with section 3.3 in the materials. You'll remember we're going through analyzing and recording transactions in this particular section, and this is really the basics, the nuts and bolts of all of the bookkeeping and financial accounting you will ever do in your life. And we're going to begin with section 3.3, which is to define and describe the initial 4 steps in the accounting cycle. Now you can look at figure 3.5, and that is at the beginning of unit 3.3. And in figure 3.5, you'll see a diagram of the accounting cycle with the first 4 steps that we're going to look at in this chapter in lighter colors. Number 1 is identify and analyze transactions. Number 2 is record transactions to a journal. Number 3 is post the journal information to a ledger. And number 4 is prepare the unadjusted trial balance. Remember, we've seen some trial balances before as examples in our information, but we're going to see quite a few more now in the second part of the chapter. So when we get to Unit 4 and Chapter 4, then we're going to do steps 5, 6, and 7. We're going to prepare adjusting entries. We're going to prepare an adjusted trial balance, and we're going to prepare financial statements. And then in Chapter 5, we're going to do the closing entries and prepare the post-closing trial balance. And then we may talk about some reversing entries, but probably not spend a lot of time on that. That's usually a more advanced accounting topic than just this early course. And then in Unit 6, we're going to go back to Chapter 2, and we're going to look at preparing the financial statements. And at that point, we'll know how we got the numbers that we're going to use to put on to the financial statements. And we'll know that in more depth. So we'll go back, and we'll probably in Unit 6 also review some of the material for Chapters 3, 4, and 5. And then I think after Unit 6, we get our midterm. So, this is really important that you stay up to date and stay up to speed and do your homework and do the quizzes. Even if you don't know what you're doing, that's good. At least that tells me that you don't know it, and I know what to go back and try to emphasize as we prepare to get through the first half of the semester together. So you can see here in figure 3.6, these are the first 4 steps in the accounting cycle. And with step number 1, we have the example of Mark Summers, and he has a $200 invoice to a customer. So he issues he produces a $200 invoice and gives it to a customer. So that's the example, and that's a sales receipt. It's an original source document that contains financial information that creates a business transaction for Supreme Cleaners. Okay, so those are all important concepts. Original source documents containing financial information and a business transaction. Then take a look at general journal and figure 3.7, and that is the the general journal, and this is a very, very truncated part of a general journal. I mean, you can create a general journal yourself. Here, I will do it in front of you. So you can take a piece of notebook paper like this, and you can draw a line down the page like this, and at the top of the page you can write general journal, and you can draw a line on the side of the page right here, and up at the top you're going to put date, you're going to put account, title, and actually in a real general journal what you would have is this. You'd have another column right here, and that account, that would be the account number. Account number. So we would move account title over here, and the account number would be a column right there. And then over here on the right hand side, we're going to have debit and credit. Okay, that's a general journal. If you were a bookkeeper or an accountant for a business, you wouldn't have to go out and buy some fancy accounting paper. You could just create your own general journal right here. I just made one, okay? And each day we're going to have transactions. We're going to put the date. We're going to put the account number from the chart of accounts. We haven't learned that yet. You're about to learn that. So then you're going to have a description of the transaction with the accounts listed as well. So typically what we would do is, let's suppose that we had well, let's just take the Mark Summers example. So let's say on day one, so 1/1/2022. Okay, there's the date. Let's suppose we had revenue. Okay, revenue, remember, in the chart of account is going to begin with what number? What number is it going to begin with? Revenue is going to begin with a 4, right? Remember, assets begin with 1, liabilities 2, equity 3, revenues 4, and expenses 5. So it'll be 4. So let's say revenue is account 401. That's the account number. Okay, and we're going to have, what's the typical balance in revenue? Okay, revenue is typically a credit. So we're over here in the credit, we're going to have $200. So here's $200. We have just journaled half of the transaction. Now, why do I say half? Because in double entry bookkeeping, for every credit there has to be a debit, and for every debit there has to be a credit, so that every transaction balances. So we're going to have to come up with a debit entry. Now, did Mark get cash, for this invoice? No, he just sent out the invoice, and so Mark is clearly on the accrual method. If he's going to record this in his financial records, he has to set up the asset that reflects a $200 sale. Well, what is that asset? Well, the customer owes him $200. So what do we call that? We call that an account receivable. So we're going to set up accounts receivable, and we're going to put a debit, and we know that this is an asset account, so that's it's a normal balance to have, a debit as the debit in the assets. So we're setting up an asset of $200 for account receivable. Now, accounts receivable is an asset, so that's going to be in the 100. So let's say we call accounts receivable 102. We're going to reserve 101 for cash. So account receivable, that's 102. It's the second of our current assets, and we're going to put a description to record sale to customer. So that's our description. Okay, great. And we know that our credit equals our debit. Okay, so everything is still in balance. We haven't gone out of balance about anything. So our journal balances, so we're happy accountants. Okay, so that's how it works. It's not that difficult. You can do it. You can do it. So over here, then we talk about posting it into the T accounts. And in step 3 in your book, you actually see the posting into the T accounts, but they never show you the first step with anything filled in. So I just filled that in for you. And then the 4th step in the process is where you prepare the trial balance, the unadjusted trial balance. And you can see that what your book has done for you is that they have shown you which balances are typically debits, which are typically credits, how they fit together, and then obviously the debits will have to equal the credits or your trial balance doesn't balance and you're out of balance. Okay, so that's the basic format, and that's really what section 3.3 was designed to take you through, the steps in the process, and hopefully I filled in the missing step for the general journal. And then also got you the sort of the basic concepts here. So let's go on to 3.4. So now we're going to analyze business transactions using the accounting equation and show the impact of business transactions on the financial statements. Now, as we go through this, really you have a long set of comprehensive examples, and you really should just maybe, if you're the, kinesthetic type person who learns by doing, maybe what you should do is just print out these pages and just, or just write them down and work through the numbers and see how it makes sense. I can't take the time in a lecture to go through item by item, transaction by transaction, and explain it to you. But you can learn it for yourself, and you're going to learn it as you go through these step-by-step examples, and then do the homework, which duplicates many of these examples. So as you do your homework, look for the questions and see how they fit into the examples that are given in your book. But spend some time with this and really work through it. There are 2 good examples in section 3.4. There's the small programming company, and just work through this carefully. I mean, really study this section. Note how the cost principle provides uniform, verifiable information, but it doesn't take information about inflation or any other unrealized gains into account. So it's using actual historical cost data, not estimates of what the current values are. Then read through the transactions, maybe just copy them down, look step by step. Note how the journaling and the posting preserves the quality of the accounting equation. So every time they do a transaction, they're doing it with the accounting equation showing you that, see, you've got an equal entry on both sides of the equal sign. So you've got, your debits and your credits are always going to be equal. And, there's example after example after example through, all 6 of these transactions. And, as you go through them, you can see that the increase of 32,600 is on both sides, both the asset side and also the liabilities plus equity side, and so everything stays in balance. And then the your turn example with Debbie's Dairy Farm, see if you can do that. Do it by yourself and figure out the 4 transactions. So see if you can copy that model that was used for the programming company and use that same technique to figure out Debbie's Dairy Farm. And when we grade, when we grade the quizzes and when we go through the homework, I'll do another lecture explaining how it works on the homework, but see if you can work it out for yourself. That's the best way to learn, is to learn by doing. So there's your example in 3.4. In section 3.5, we're going to use the journal entries to record transactions and post them to the T accounts. So in this section, we learn that journals are the first place where the information is entered into the accounting system, which is why they're often referred to as books of original entry. Okay, that's kind of a theoretical concept, but just understand that the journals don't look like those little bitty skinny things that you see, those little snippets that you see. They're going to look like what you get to at the end of the comprehensive example. It's going to be something like this, with all the days, all the transactions for each day, for the whole month entered on this long piece of paper, this long journal. And they actually make special accounting paper for journals. You can buy it. It's a waste of money, but you can buy it. A lot of people do this on Excel schedules, or they do it in QuickBooks, which automatically prepares it for you. So if you're familiar with Excel, you can set up your own journal format. That doesn't cost you anything but a couple of bytes of storage, and you don't have to buy the special accounting paper to do that. But you can see the examples. So see how the journal looks like this: cash and common stock, and then there's an explanation underneath it. It looks just like the one that we just did, right? So we know how to do that. And you can see the examples in your book and just work your way through them and see how you can have complex journal entries too. So in the example where the shareholder contributed some cash and some supplies in exchange for common stock, you can see an example of a single entry that had two debit entries and a credit offset, but it still equals 5,000 on both sides. And then here's the long example of these 12 entries for Printing Plus, the Lynn Sanders Printing Service Company, and just read this, section carefully. But the journalizing transactions transfers information from the accounting equation analysis to a record of each transaction. And there are several formatting rules, and you can see an example of good formatting, with the exception of not having the chart of account numbers in it yet. They're teaching that to you without the chart of account numbers, but I taught it to you with the chart of account numbers already associated with the accounts in the example I showed you. So there are several formatting rules for journalizing transactions that include where to put the debits and credits. Typically the debits are going to go first and the credits go second. Typically the debits are flush with the left side of the entry, and typically the credits are indented because the credits are on the right side of the numbers. The account titles, which ones come first, the need for the date, and the inclusion of a brief description. So you've seen examples of all that. Step number 3 in the accounting cycle: post the journal information to the general ledger T accounts, and the final balances in each account must be calculated before transferring those numbers from the general ledger T accounts back to the trial balance. Now, I've done some forensic accounting in my lifetime, and I can tell you that if I have a detailed trial balance, I can pretty much find out anything about what a company has done, at least as far as the basic transactions. And if somebody is skimming money, or if they are hiding assets, usually the detailed general ledger will disclose that if you look at it carefully and know where to look. So in any event, read this section carefully and make sure you understand it. How transactions are recorded in the journal, then post the journal entries into the T accounts. The example in section 3.5 about Printing Plus, It's carry forward from section 3.4. You see the example of 12 journal entries of different types of transactions, and those are the 12 most common transactions that you will run into in real life. I mean, it's like learning, if you were playing basketball, this would be like, learning to do layups and learning to shoot a jump shot and a foul shot, and learning the basic man-on-man defensive techniques, shuffling your feet instead of crossing them, and keeping in a crouch, and how to move your hands so that you don't look like you're committing a foul, and that sort of thing. How to set a pick, as opposed to blocking somebody. These sorts of techniques. How to, where you fit in on a zone. How do you move in a 2-3 zone, in a 2-1-2? How do you play a box and one when you got a hot shooter on the other team? Stuff like that. So that's the these are the basic building blocks, the 12 basic building blocks of journalizing transactions. So really do learn to see how those are journalized, and then how those go onto the T accounts. And then we'll move into the next section, which is how to construct the trial balance. So let's go on now to posting these, and you can see the completed journal down at the bottom of section 3.5, which has all 12 transactions recorded, and a lot of these are just going to give you a model that you can copy for the homework that you have, or that will give you the answers to a lot of the questions that are on the quiz. And I think your homework is posted and your quiz is not posted, but it'll be posted on Friday. So there's a your turn exercise, and again, you can't get too much practice on this. If you try the your turn exercises and follow how it's done, it will really help you with the homework, and it'll help you with all the material to come in this course. I mean, this chapter is indispensable to your understanding of accounting. I can't emphasize that enough. If you feel like you're behind in anything, just make sure you understand, everything in this chapter, and then chapter 4, which is also important, will be easier, and chapter 5, which is also important, will be easier, because you're just tweaking the numbers. You're learning, some different techniques to finalize the numbers from the original entry into the journals, and the consolidation into those T accounts. And you can see how that all fits together in the general ledger. Okay. Let's see here. Let's go on to preparing a trial balance. So what is a trial balance? Well, the trial balance is a listing of all the accounts that are in the general ledger with non-zero balances, and information is transferred from the T accounts to the trial balance. So sometimes errors occur on the trial balance, and there are ways to find those errors. And one may have to go through each step of the accounting process to locate an error on the trial balance. So, back to the example of printing plus, how the trial balance is constructed, from all of the T accounts. So you see, printing plus, and you see this diagram that's got the little blue lines that shows, the general ledger accounts, cash, accounts receivable, supplies, equipment, accounts payable, etc., on the right-hand column, and then the trial balance, each of the entries that go into the trial balance, and oh, happy day, it balances at $34,000. But maybe there could be some things that go wrong. What happens if the columns aren't equal, and how do you locate errors? And there's two really good techniques to find and fix errors in your trial balance. And the first one is using the example of printing plus, and you can see an experienced eye looking at it would see it right away. But if you're new to it, if you look at the example for printing plus, I think it's the third trial balance in this section, and it's the one where the debits equal 33,900 and the credits equal 34,100. Well, you can immediately see that it's not in balance. There's something wrong. This is supposed to equal. The debits are supposed to equal the credits. So what went wrong? Well, we can see that the difference is $200. Now, I can tell you a little trick of the trade right now. If you think maybe you transposed a number, wrote down, 340 is 430, the difference in a transposition, particularly a simple transposition, is always going to be divisible equally by 9. Okay? So if it's just a transposition in an entry into one of the columns that causes you to be out of balance, well, that's going to be divisible by 9. Well, this number isn't. Okay, this number is 200, and 200 divided by 9 is not equally divisible. Okay, so it's not a transposition, or it might be a transposition in something else, but it's not just a transposition. But the funny thing is that let's divide the number by 2. You divide the number by 2 if you're worried that maybe you put it in the wrong column, if you put it in the credits instead of the debits, or the debits instead of the credits. Well, 200 divided by 2 equals $100. Well, guess what? We have an entry right there on the trial balance for $100 even. It looks like we've put all of the equity balances into the credit side, but dividends, are the normal balance in dividends is a debit balance. In fact, dividends are always a debit balance. And so that really needs to go onto the debit side. And so that'll help you identify the error. So if you think you maybe only made one error, first try dividing it in 2 and looking for an entry that's in the wrong column. Or secondly, in our second example, which is the next unadjusted trial balance that's got a debit column of 35,800 and a credit column of 34,800 and 34,000 in the credit column. In that case, we could divide it by 2, but there's no $900 entry, so we didn't put something in the wrong column. And again, you could have multiple mistakes too, so you might have to try several of these techniques and really hunt around a little bit if you have a couple of errors. But if you look at the difference of $1,800, that is neatly divisible by 9. And so since it's divisible by 9, it looks like we've got a transposition. And if you go back to your accounts, back to your T accounts, and just check each of the debit and credit entries versus the balances in the T accounts, you'll see by the time you get down to the fourth asset, equipment, that it should have been 3,500 instead of 5,300. And so you've had a transposition, and that difference is 1,800. And it's, of course, divisible by 9. So that's a way you can troubleshoot and look for errors in the trial balance. So then there's an example with the Magnificent Landscaping Service, and you can go through that yourself. That's another kind of simple example. But in any event, please work through all of these. You have your homework assignment. Do your homework. Do it diligently. Do the best you can. Don't give up, and keep trying. And if you have questions, feel free to send me an email. I will be at office hours at the cafeteria on Friday morning. between 9 o'clock and around 11:30. So feel free to come in and talk to me. I don't know that we had anybody come visit last week, but perhaps this week some of you would like to talk about your homework or other issues with respect to the work for the course. So feel free to do that. I will be there. And again, try to find and follow the examples in the book. When you're asked a question that you don't know how to get started with, try to find a similar example in the book and follow how the book, maybe not these last two examples of how to do it wrong, okay, but find the examples of where they did it correctly and follow those examples. And good luck with all that. So that's it for the lectures on Chapter 3. However, for all of the chapters, I will post an additional lecture analyzing the quiz and the homework. So just check back to see as those are posted. I have not yet posted the review of the quizzes for chapters 1 and 2, so those are coming next, as well as the homework for chapter 2. So I will record those next, and also post your grades for your quizzes and your homework to date. If you are behind in the assignments, I know we had some latecomers into class, go ahead and do them anyhow. And if you can't post them, contact me and I'll reopen Wolf Den so you can post your answers. We may have to, depending on the circumstance, we may have to make an adjustment on some of the grading, but please do the work. If you don't do this early work, it's like you're trying to build a house without a foundation, and it's not going to work. So please make sure you do a really good job in reading all the material and doing all the assignments for chapters 1, 2, and 3 through this week, and then move in and stay up on top of chapters 4 and 5 for the next 2 weeks. And then we'll pull it all together during week 6 when we do our preparation of our basic financial statements. So good luck with everything, and have a great day. Bye-bye.